everyone, this is Aishwarya and welcome to Scale Talks where finance gets real and we are going to make it spill some secrets. From cash to cryptocurrency, banks to blockchain, we are going to break down the future of money in ways you have never heard before. Let me introduce to you Dr. Sailesh Khandelwal, who happens to be the powerhouse of hedge fund and has unlocked $3.5 billion market value in just a span of 18 months. Welcome to the show, sir. How are you feeling today?
It's pleasure and it's wonderful being on a Scale talk show today. Thank you very much.
So, are we seeing the end of traditional banking? What does money's future look like now that everything is going digital?
I believe banking is really, yes, it's getting digital. And we foresee that the cash economy is going to be reduced going forward. We foresee to throw some lights on it, okay? So I wish to throw you on a UPI, the basic transactions we look at in India. If you look at the digital transaction overall, it's somewhere about 280 billion transactions happened last year. This year, if you look at it, has tremendously have increased to about 35%. And if you look at the major contribution which is coming from is UPI. Okay, so UPI has given us about 185 billion transaction. So if you look at the billion, 1 billion is almost about 8,000 crores. If you look at 185 billion UPI transaction, then it's somewhere about 200 to 265 lakh crore transactions which have really happened in India. Okay. And we see, yes, the cash economy is coming down and we see the banking is also improvising on a most on the digital era now. So most of the RBI regulations which is coming in, most of the banking system which is going to follow now, it's going to have a different aspect going forward. So India is, as you know, that India is to be on number 2 in terms of crypto investment as well, so on the blockchain side. So if you look at banking is also now adapting all the blockchain based approach where RBI is now coming up with their blockchain stable currency or CBDT currency. Now if you look at this entire era is pushing towards a cashless economy going forward.
True.
So that's my view on that.
With so much of AI and technology, do you think we still need humans to make monetary decisions?
I would say rather partially yes and partially no, because if you look at every era today, every industry has started adapting an AI. And AI is nothing as a new technology. I think most of about 10, 15 years old technology, but which is getting aware in today's market. So in finance, if you look at, we suggest not to be dependent on the AI. You can get some information, inputs, but we want the frequent tracking is very important for any kind of an investment or money related approaches which you do. Depending wholly 100% on the AI might give you a wrong decision sometimes, but I would not ignore that AI is developing. This developing in entire industry market, but we suggest every youngsters or even the old age or elderly people should look into how AI is going to transform in the financial planning or financially advisory model. That's it.
So you mean to say AI and human logical decisions can coexist and help us make better financial and smarter decisions?
Yes, I always believe that it can help you. That's what I said, partially yes, partially no. So we need to combine both to make a proper and helpful decisions to make fruitful going forward.
So is owning assets the new definition of wealth? Is savings just not enough? What's your take on it, sir?
Okay, so for this, I might need some time to clear certain myth. Okay, so I'll ask you one question, general question. Can you tell me which are the asset classes you know or you invest in?
Sir, FDs or gold, real estate, and
so probably, so you may not be able to extend 4-5 more better. Okay, so there is a one step ahead. So what people does is they have a myth that they have a savings. So they used to park that into say PF or say about fixed deposit or in the real estate market or into gold as such. That's it. So there are one step ahead other asset classes which people should look at. Now, if you look at today, now the blockchain is developing. Okay, the industry is exponentially growing. NFT market is growing, right? There are startup companies are growing. The Indian government has given a lot of benefit for the startup companies, and you see more of the startup companies have started scaling up in X, Y, Z. So if you look at most of the actors in today, they started investing in startup also. So we'll have to look at, if you have 100 rupees, you always try to diversify this into 5 6 asset classes at least. So most of the people don't do that, and they stick with the FD or gold, which actually has an inflation hit. So if you look at the inflation hit, probably if you look at the inflation based returns on this FD gold, it's always very shorter returns, which probably that doesn't satisfy your need over a period of time. Example, if you have a goal that you need to build a home, or if you feel that you need to go buy a luxury car in future, probably these are the dreams which you have, then probably you have to look at the asset classes which has an high returns beyond 12 13%. Yes, anything is any returns with GDP plus inflation gives you beyond the returns of this is probably a risky asset classes, but you need to diversify. Say example, if you have invested 100 rupees, you should have at least 5 10 rupees into a risky asset classes as well, where that helps you balance your portfolio. So we always recommend beige wise, try to give your investment portfolio importance. We see today in the market that 50 years old takes high risk, 20 years old they normally don't take risk. We see 20 22 years of age people, the kids who recently joined the jobs, they don't have a savings habit at all, but they have to start from the early stage so that when they retire 40 45 50, they get an early retirement option. But normally we did a research that most of the people, after 45 they start looking at a savings option, because that age gap has a huge lot of commitments, huge lot of loans, credit card EMIs, so they don't get into a investment habits at all. So we personally see this myth has to be cleared by the individuals and the common publics to look at the different asset classes over a period of time.
So
Yeah.
traditional methods are outdated and we
Yes,
have to
yes. We
change
need to go along with the markets. Yeah.
Exactly. Got it, sir. Got it. So now talking about retail investors, do you think they are disappearing? If so, who wins in the future, sir?
Uh, Talking about retail investors, it cannot be disappeared, because we personally see that any kind of FII investment or FDI portfolio investments comes in, this all been tracked towards retail investors, and we personally suggest that retail investors nowadays, what happen is they too much get into advisory concepts. Probably they don't learn and enter the market, rather they just get advice from third person and get into the market, and that's where we see the lot of hinges and negative approaches happening in the portfolio negativity. So if you look at the recent SEBI's research report, which says about 90% of the retail investors have lost the money in the market. Now this is because they either don't have a proper knowledge getting in the market, they probably get recommendation from the third person,
True.
or get from their friends relative who have invested into their portfolio. So always the financial approach should be based on their age, their money, and their goal. But
Risk
normally
factor.
this doesn't happen. They just have a money, they just enter in the market. That leads to a most of the negative approaches. We see the market is full of scope, we still just 3 4% of our economy, and we see the most of the emerging companies have been participating up to 30% today in the stock market. But we see the retail investor in India participation is low, and we feel that going forward it will have a really a good growth in the retail participation as well. But only suggestion what we propose them is, please be a learning approach getting into the market, have a goal setting, have a proper advice getting into the market before entering.
Just don't
Yes.
go with the crowd and just
Yes.
don't listen to everything that comes your way,
Yes,
right?
of course.
So, what does financial freedom look like in 2025? Can anyone really escape the system?
Yes, if you're willing to escape from this system, you should not only focus on 9 to 5 jobs, you should look for a passive kind of an alternate kind of a avenue for you. Because today, 9 to 5 job alone cannot make your life sustainable.
Very true.
And kind of an inflation which is moving up, you always should have an alternate investment portfolio. That's it.
Amazing. Even a side hustle is essential, right? I mean, along
Yes,
with your
yes,
9 to 5, you need to look for other avenues to invest or, to keep
correct.
things going. We need to
Correct.
have that
Most
going,
of the
right?
spending has to be today's youngsters, which see if you look at 2025 is might be a new era for the youngsters getting into the market, and we see most of the youngsters are really interested towards the money making approaches, and there are hedge kind of advisors coming from the market where the youngsters also get trapped, but we advise them look at for a better avenues which is there in the market, get a right financial advisor, get with the right friends, your circles, that makes a real difference on your portfolio.
So, do you think renting is smarter than buying in 2025? Or do you think we are just afraid of commitment?
uh, if you look at this, I have to address with the numbers. Basically, if you look at real estate market, any construction cost have really increased more than 10 to 15% on the material cost. Now, any kind of an apartment, for example, if you want to build an apartment, you want to buy some apartment, it will not cost in metro city. It will not be less than 1 CR or
Definitely.
1.5 CR,
Yeah.
right? So, if you look at you want to invest about 1 to 1.5 CR in the metro city and you want to rent it out, the kind of rent which you get, your yield is about 3 to 4%. That's it, the highest what
Yes.
you get it.
Yes.
But if you look at the inflation cost is more than 6%, right? So if the inflation itself is a negative kind of a real return, then it's a no point investing in the real estate market right now. But it should be of, I would not say that you don't completely invest, but if you have an excess kind of a money, we always recommend you to be on a diversified portfolio model, right? So you have a 3 to 4% kind of a returns, you are sufficient. You believe that the apartment cost might be an incremental growth of, so what is the incremental growth we can look at is about 6 to 7% of your real value, plus your 3 to 4% of that, that is about 8 to 10% is what real returns what you get from the real estate market, inclusive that is after 3 years, not immediately. But there are avenues which can give you like a corporate bonds are there. If you look at mutual funds, there are good AAA rated bonds which also gives you a equivalent rental kind of a return, but which has a high liquidity. So
Okay.
even that is a 5% returns, and this is also a 4 5% returns. When you require an emergency fund, you can immediately liquidate those assets.
True.
But this here it becomes very difficult for an individual
Yeah.
to do it. So we always recommend you have a partial investment there and have a partial investment in other asset classes where the fund emergency funds can be withdrawn at any time when it's required.
Very right. Very right. So now that we've spoken about real estate, can you throw some light on virtual real estate that is happening in metaverse, sir?
Oh, that's a wonderful market which is really picking up, and we see that we just had one comparative study from the US based research company. So they threw some light on the real estate market
Okay.
versus the virtual real estate market.
Okay.
So they feel that till 2032, the physical real estate market will have a growth of say about 6 to 7% till 2032,
Okay.
which
Okay.
means your year on year returns is somewhere near to your fixed deposit. Okay, but if you look at the virtual real estate market's returns is somewhere about 35 to 40% rate compounded CAGR.
Whoa.
So which means it has about 4 times higher returns. But most of the people who are elderly owned, they are still not aware of this technology.
Exactly.
The young sharps today, they started having a blockchain artificial intelligence courses. They understand what it is NFT, what it is metaverse, what it is virtual real estate market. I see most of the top tier A companies have started having their virtual land in the metaverse market. They started building their offices. I would see Airtel, Vodafone in India, if you look at IBM, Microsoft, they started having their offices in the virtual real estate market,
Okay.
and they are making the traffic to come there on.
Whoa.
So
Okay.
we most of the people, they don't know how this technology works. They feel that having a physical land is more safer than having a virtual asset.
Yeah.
But the virtual asset is also works in the same model but gives you a higher CAGR. So one has to think before investing in this. It yes, there is an asset class which you'll have to look at for a long term revenue. It's not should be a shorter term forecasting. So we always want the general public to look for a long term wealth building, right? So So that's the approach it should be.
No, as you rightly said, I think folks back home,
Yeah.
like the traditional people, they are not aware of the whole, the metaverse
Correct.
thing that's happening. So I think we need more platforms to educate them about how this is
Correct,
going to bring
correct.
about that change.
Yes,
So yeah,
yes.
thank you so much for the
Yes,
information,
pleasure.
sir. So this brings us to the end of the episode 1 of Scale Talks. Stay tuned as we get back to you with episode 2 covering a lot more financial gyan. See you soon.